Among different strategies and entry signals that I relied in 2025, there were 3 exceptional setups that showed high accuracy and profitability. In this video, I will explain the structure and price models of the setups, and I will equip you with the best entry signals for a new trading year. Like this video, subscribe to my YouTube channel and discover what worked best in Forex and gold trading in 2025. The first powerful setup that showed great results last year is based on a classic old school price action chart pattern, double top and double bottom. But don't trade each double top and bottom that you spot. To achieve the highest win rate, these patterns should form on specific price levels and on specific time frames. Please check a bullish model. Analyzing a daily time frame, you should see a test of a key daily support level first. After that, analyzing an hourly time frame, you should look for a formation of a double bottom pattern on that daily key support level. Your signal to buy will be a breakout and an hourly candle close above a neckline of this double bottom. Set your buy limit order on its retest. Your safe stop loss will be below the bottoms of the pattern. Your take profit will be the closest intraday resistance. Learn how to trade gold and forex in my trading academy. Watch how I trade live on daily VIP live streams. Combined learning and earning experience. For more info, check the link in the description below. Look how dollar Swiss pair acted after a test of a key daily support level. A double bottom pattern was formed and its neckline was broken with a gap up on an hourly time frame. It was a strong signal to buy, and the perfect entry for this trade was on a retest of a broken neckline. More than 30 pips of pure profit were made. Now examining a model with the double top pattern. The price should test a key daily resistance level first. After that, a double top pattern should form on that on an hourly time frame. Your signal to sell will be a breakout and an hourly candle close below a neckline of this double top pattern. Your signal to sell will be a breakout and an hourly candle close below a neckline of this double top pattern. Set your sell limit order on a retest of a broken neckline. Stop loss should lie above the highs of the pattern, and your take profit will be the closest intraday support. Let me show you an example of this price model in real market conditions. That's the example of that price model on New Zealand dollar forex pair. First, the price reached a key daily resistance level. Then a double top pattern was formed on that, and the breakout of its neckline was a strong signal to sell. Opening a trading position on a retest of a broken neckline, a very nice profit was made. Meeting all the criteria, this setup achieved stunning 76% accuracy in 2025. The second setup that had a high win rate last year is from Smart Money Concepts trading. It is based on a combination of liquidity zones, traps, and imbalances. Please examine a bullish model of that setup. First, we need a test of a daily liquidity demand zone and a trap below that. After a trap, a bullish imbalance should occur on an hourly time frame. I suggest looking for a bullish engulfing candle as a confirmation of imbalance. With this imbalance, the price should return within or even above the liquidity zone with a close of that candle. Buy the market immediately after an imbalance candle closes. Set your stop loss below the low of the trap. Your take profit will be the closest intraday supply zone. Euro Aussie tested a significant daily demand zone. After its test, the price went a bit lower and we got a bearish trap. The formation of a bullish engulfing candle on an hourly time frame confirmed that this violation was false and that it was a trap. It was a strong signal to buy, and buy trade was opened immediately after this engulfing candle closed. Stop loss was below the low of the trap, and take profit was the closest strong intraday supply zone. So more than 50 pips of profit were made. Now study a bearish model. First, we need a test of a daily liquidity supply zone and a bullish trap above that. After a trap, a bearish imbalance should occur on an hourly time frame. I recommend looking for a bearish engulfing candle as a proof of a selling imbalance. The close of that candle should strictly be within a liquidity zone or even below that. Sell the market immediately after selling imbalance candle closes. Set your stop loss above the high of the trap. Your take profit will be the closest intraday demand zone. And as an example, let me show you a setup that we treated with my students. Pound New Zealand pair tested a major liquidity supply zone on a daily time frame. After its test, the price went above that with the bullish trap. The trap was followed by a formation of a bearish imbalance candle on an hourly time frame. The price returned within a liquidity zone, forming a bearish engulfing candle. That was a strong signal. A trading position was opened immediately after this engulfing candle closed. Stop loss was above the high of the trap and take profit was the closest intraday demand zone. So almost 60 pips of profit were made. Meeting all the conditions and criteria, this setup achieved 79% accuracy in 2025. The last setup worked phenomenally well in gold trading last year. Because of a crazy bullish rally that the market started straight from the beginning of the year, this simple pattern provided huge gains. I am talking about a bullish flag pattern. Please note that the first two setups that we discussed were bullish and bearish. In the current case, we are considering only a bullish pattern. Please examine the exact price model and criteria. You should look for this setup on a 4-hour time frame. Make sure that gold is bullish. After an update of a new high and formation of a new higher close, a correctional movement should start. The price should start falling, forming an expanding parallel or contracting channel, a bullish flag. Your strong signal to buy will be a bullish breakout of a resistance line of a flag and of the level of the last lower high within the flag. So we will need a double breakout. Then set your buy limit order on a retest of a broken level of the last lower high. Set your stop loss below the lows of the flag, and your take profit can be the closest strong psychological level above a current high. But the best way to use this model is to treat it without fixed take profit and using a trailing stop loss instead. That will help you catch thousands of pips. This pattern achieved 69% accuracy, but because of a strong bullish momentum, each profitable signal provided huge gains. Please check the example of the pattern that I personally treated. That is an example of this price model in real market. Gold formed a bullish flag pattern after updating a new high. The formation of an expanding falling channel on a 4-hour time frame signified a correctional movement. A bullish breakout of its resistance line and of the level of the last lower high was a signal that correction is over. Once a 4-hour candle closed above the level of the last lower high, a buy limit order should have been set on its retest. Opening the trade, stop loss was lying below the lows of the flag, and using a trailing stop, we could catch a very significant rise way to 4,000 level and even higher. If gold continues rallying this year, and I think it definitely will, keep an eye on bullish flags on a 4-hour time frame as your signal to buy. Using these 3 setups, you can successfully trade gold and forex in 2026. Integrate them in your trading strategy, learn to recognize them, and follow the rules that I provided. Let these setups bring you huge gains in a new trading year. Learn how to trade gold and forex in my trading academy. For more info, check the link in the description below. Also traders, please watch my other videos.